Welcome back, guys. We're in the very last, can you believe it? We're in the 7th week of our option bootcamp session. And I'm going to go ahead and share a screen with you guys today. And this is, and you're looking at my screen now, Bob. It says options trading bootcamp session number 7. Am I correct?
Yes.
All right, good.
I can't see the weight room, by the way.
Oh, you can no longer see the weight room?
No, now I'm able to. Sorry about that.
Okay. Well, what we're doing is we've learned several different trades in these last 7 weeks. The very first session, we learned to sell naked puts and then how to turn that into the wheel strategy to do covered calls. Greg, I know you kind of liked that concept. Did you ever try it?
I did not yet. No, yeah. on the earlier one I might have, but I got to get back into it. Do it.
Right. The second thing we learned how to do was, and by the way, on selling naked puts, is that a bullish strategy or a bearish strategy?
Bullish.
It's a bullish strategy. Secondly, we learned to sell naked calls, and is that a bullish strategy or a bearish strategy?
Nancy knows.
Bear.
It's a bearish strategy. And then what if it gets hit and it hits its naked calls, you can turn that into a short and then sell puts against it. So I'm calling that the reverse wheel. The first one is the wheel strategy. The third thing we learned was selling poor man's covered calls. And is that a bullish strategy or a bearish strategy?
Bearish.
It's bullish. Poor man's covered calls is a bullish strategy where you're buying the 70 delta call further out in time and you're selling the 20 to 30 delta call closer in time. And poor man's covered puts, is that a bullish strategy or a bearish strategy? That's a bearish strategy where you're buying the put 70 delta put further out in time and you're selling the 20 to 30 delta put closer in time. Now, strangles and straddles, is that bullish, bearish, or neutral?
Neutral.
It's a neutral. And in that strategy, you're selling both the put and the call at 20 to 30 delta in the same expiration period. And then last week, we learned about iron condors, which is exactly like a strangle, except it's a defined risk trade where you're buying the wings. The wings provide protection. So you're selling a 20 to 30 delta, essentially strangle in the same month, and you're buying the wings, say at like 5 or 10 delta. So a strangle or straddle is an undefined risk trade, whereas an iron condor is a defined risk trade. This week, I'm excited to promote diagonals. And technically, the poor man's covered call and the poor man's covered put are both diagonals, but I'm going to tell you today about a strategy that I've shown Nancy. Nancy's been doing it. Greg, I believe, has had a preview of this prior, and it's called a rolling put diagonal or a rolling call diagonal. Well, here's what's happened in the VIX this past week. Fear peaked today at 23.55, and then it trickled down to 20. This week's range is 1819 to 23.5. OJ just joined us, so I'm going to go ahead and admit him there, Bob, in the waiting room. Can anybody tell me what is VIX?
Volatility Index.
It's the volatility index. It's also been called the fear index, and it's a measure of fear across the market. Usually when the market goes up, does VIX go up or down?
Up.
Typically when the market goes up, VIX goes down. People relax when the market's going up. When the market's crashing down, what happens to VIX? Usually VIX goes up when the market is crashing because people are afraid. Most people are bullish. Buy and hold. Now, the market was range bound last week. And the SPY took a high of 396 and a low of 384. And Bob, I just let Brandon in, and it's had about a 3% swing. So it's just kind of been up and down this past week. And in terms of our agenda today, I want to start off like I do every boot camp by giving you guys a chance to tell me, what have you learned or practiced since we last met, related somewhat to option trading? What do you got?
Iron condors are not sexy.
Iron condors are not sexy. Why do you say that? I believe that was OJ's voice.
Yes, sir.
Why do you say that? What do you mean by sexy?
I mean, there's just, it's safe. There's not a lot to gain. And, that's about it. I mean,
yeah, it's definitely not YOLO. Nobody's posting on Wall Street Bets about the Iron Condor they're creating.
No.
Right?
They might be posting about the win rate, though.
Yeah, maybe. I think that's for more people like you and I, Greg, that are more consistent in getting on base and hitting singles. But I think, kind of like OJ says, it's not that get rich quick scheme, if that's what you're talking about in terms of being sexy. But it's regular income generators. And I tell you what's sexy. Sexy is me being able to pay for my 93-year-old's mom's assisted living with her account by regularly bringing in income. At my age, that's sexy.
Well, that guy that is in the Tasty Trade group that trades SPY rather than SPX, and he trades hundreds of contracts. Yeah. It's insane. But he does it, and he consistently does it. And it's like, wow, he's doing 0 DTE, and he's doing hundreds of contracts. It's crazy, but he's doing it.
Yeah, I bet he feels like he's pretty sexy. Yeah. He's still. So let me revisit the plan. Every week we learn a different trade, a trade a week. You then practice it for the next 7 days. So today we're going to be learning about selling diagonals, more specifically rolling put diagonals and rolling call diagonals. And I believe, OJ, I've given you a preview also of this. So I think Greg and you and Nancy all have had previews of this. Some of you have been practicing it. Some of you just learned about it and haven't been able to practice it yet. So the accountability plan is I'll share kind of who are the 5-star students that have done their homework. So here's what the leaderboard looks like. And it looks like, it's kind of been a race where regularly you've come into first place, OJ, and then other times you've drifted down. And then it looks like Chris Motafov at one time zoomed into first place. Looks like you've overtaken him this week. James is in third. Alex E is in fourth. Oki Brock, my nephew's, in fifth. Brian Hasley's in sixth. Charity, who's auditing, is in seventh. Ron Miller is in eighth. And TJ, who wasn't able to join us today, is in ninth. And Max is at 10th. So in terms of the review, somebody give me a 2 or 3 sentence definition of what selling a naked put is all about. One at a time, please. Tell me what selling a naked put is all about. First, is it bullish or bearish?
Bullish.
Bullish. What delta put are you selling?
70.
Primarily, you're selling the 20 to 30 delta put. You're confusing, Nancy, with the poor man's covered put, where you're buying the 70 delta and you're selling the 20 to 30 delta. The fact that it's lower than 50 tells you that it's out of the money. 50 is at the money. Greater than 50 is in the money. A naked call, bullish or bearish? Selling a naked call, bullish or bearish?
Bearish.
Bearish. Now, are you selling, what delta are you selling?
30.
30 delta, 20 to 30 delta. A poor man's covered call, bullish or bearish?
Bullish.
Bullish. What delta call are you buying?
70.
70. Further out in time or closer in time?
Further.
Further out in time. And what are you selling?
30.
20 to 30 delta. Further out in time or closer in time?
Closer.
Closer in time. Now, did everybody leave except Nancy? Because she's the only one answering my questions.
A lot of auditors here.
A lot of auditors.
You're
All
the smartest
right.
out of us.
And Ron's doing taxes, and Bob's fantasizing about his latest sailing trip, feeling like he's
I
been
put
left
it up for
behind.
Greg. I put the boat up for Greg.
You did. All right, great. Poor man's covered put. Is that bullish or bearish?
Bearish.
Bearish. Now, what delta put are you buying?
70.
70 delta. Further out in time or closer in time?
Further out.
Further out in time. And what are you selling? What delta?
20 to 30.
20 to
Closer.
30. Closer in time. Strangle. Bullish, bearish, or neutral?
Neutral.
Neutral. What deltas are you selling?
30.
20.
20 to 30. Are you selling the puts, the calls, or both?
Both.
Both. Iron
Same
Condor.
period.
Iron Condor. How does that differ from a strangle?
Like a debit spread where there's a cap.
It's capped by the wings that you buy. And the wings that you buy, I suggest maybe a 5 to 10 delta wings. And the wings will make it a defined risk trade. Thanks, OJ. So some trades that worked this week. OJ, you ready to explain? GameStop up 21.55. SPY up 24.99. Tesla up 19.40. Mara up 5.90 and PayPal up 4.68. You can take those in any order. Just explain to us some of your reasoning.
GameStop had earnings. I thought the sentiment was negative. So I played them going down.
How did you play it?
What
What strategy?
did I do?
You got two choices, selling naked puts or poor man's covered puts.
I think I did a poor man covered put
Okay.
on that one. Yeah.
All right. And what'd you do on, what was your SPY?
I've had for a while. I did a poor man covered calls. It's kind of like a diagonal. So since it's, I bought one, I think a couple weeks out, and then every Wednesday or Friday, I would sell a call further out. And I just kept it in. I would let it expire worthless or close it out. And then I would re-up another one for the next week. That was out of the money, and that would expire, and I would collect premiums on that. So I was kind of the poor man covered call that I turned into a diagonal.
Okay. So essentially it was almost like a rolling call diagonal.
Yeah, that's
And
a good name
were
for it.
you-
I called
were
it the OJ trade, but sure.
Nice. And were you selling it real close to the money or at the money, or do you remember?
No, it was further out. It was somewhere I was safe to where I was going to collect the premium.
Okay. And a Tesla, how did you play that? I'm going to assume you played it bearishly.
No, I played it actually. I thought it bottomed out the other day when, last week, I think it was last week and then going to this week, where it was at the bottom. And just from listening to people and reading technicals on it, I thought it had reached its bottom around 6:30 or so.
Okay.
And then we got lucky with the pop when the woman from ARK Investment said that Tesla was going to be worth $3,000 in about 4 years. So we got a big run up on that day. Mara was just, I follow Bitcoin and movements. So I felt like Bitcoin was going to go up intermittently. So I think I sold naked puts on those.
Speaking of Bitcoin, are you aware that Tesla is storing a significant amount of their cash now in Bitcoin?
Yeah, Tesla, Square, PayPal, a lot
Also,
of
you
companies.
can buy a Tesla with a Bitcoin, I guess.
Yeah.
Yeah, I want to say they've put $2 billion in Bitcoin, but I'm not sure.
Yeah,
that
I think
number.
you're right. They're about to re-up another one. They're about to re-up probably tomorrow.
But you'd think that that activity by the leader in tech would cause other Fortune 500s to say, hey, maybe we got to put a little of our cash in there for safety's sake.
But
I wouldn't be
that's what
surprised.
everyone's doing. So that's what everyone's doing. So that's why Bitcoin, unlike 2017, is holding its value a lot better because people are holding it and not selling it. So there's scarce Bitcoin out in the market, therefore eventually driving prices up, and it keeps climbing and climbing because these corporations are buying and holding and they're not selling.
Bitcoin is the new gold.
Yeah.
Also, are you guys up on that whole tokenization thing? That's a whole mind blow by itself, you know.
Yeah, it's like reward points. It's like frequent flyer points for Ethereum and everything else, depending on what you like to use or what your coin of preference is going to be.
Form of gamification.
You can literally sell anything.
And what was your thoughts on PayPal?
Same thing. I'm surprised they didn't put Square in there, but PayPal was also in the, they're storing Bitcoin as well. So they kind of right now, I like them for long term, but I just feel like tech this past week has been, past 3 weeks has been just beaten up, and I'm kind of scalping and swing trading them at certain lows where I feel like people are going to buy in.
Gotcha. And Chris, who's not with us today, but he's presenting a big presentation at work that has potential to be pretty big. And one of his big trades was Sabre at 1160. James just continues to kind of hold some of these, and it continues to work out for him. Riot is up 37.77, Mara is up 33.23, XNet 1190, and RBLX up 27.77. James doesn't tend to be flipping these. He tends to be kind of holding on some of them. Alex E had Carnival Cruise Lines at 10:30. I don't believe he was able to be with us today. And Brian H. If you guys remember in the first session, there's a group of traders that just said, we just buy what Brian tells us to buy, I believe. Mara was up 47.90 and J&J was up 5.67. If either of you four guys are with us today, speak up now. I don't believe that either of those four were able to join us. So accountability, our 5-star student awards, drum roll, please. Juiceball, TJ, myself, that seems like I'm trying to get credit for somebody, right? I'm teaching it and I actually did all the homework. And Brandon, good job, Brandon. And in terms of today, what I wanted to teach you guys, and I'm excited about this because I'm not going to say I invented it, but actually when I was first doing this trade, a friend of mine suggested what they were doing, and I misinterpreted what they were doing and back tested it and found out the strategy. I liked it so well that I adopted it. And so I'm kind of like OJ. It may be invented elsewhere, but I kind of haven't seen it used quite like this. And so I'll take credit for it. So essentially, here's what you do. You buy the 35 delta put or call 2 weeks out. I started doing the 30 delta and I decided that there was too much adjustment. I decided to buy the 35 delta instead. Takes a little less buying power, a little less risk. Then I sell the at the money put or call at the next expiration. On expiration day, I'll roll the short strike to at the money on the next expiration. So today is Thursday. So if I was putting one of these guys on, the short strike would be tomorrow on Friday. And then I would roll Fridays to Monday. You can do this trade on SPX, SPY, or the RUT. And I believe Nancy have you done them on all three, Nancy?
I just started the RUT.
You just started the
Today.
Can you tell us a little bit about your reasoning for why you went with the RUT?
No reason.
Okay, just an experiment then.
Yes.
Well, be sure and tell us kind of how it goes. We will all want to learn from each other here at the Bootcamp.
Sure.
And your rolling put diagonal makes money if the market goes up, or if the market is unchanged, or if the market goes down less than the credit you've collected from the short. I know that's a lot to take in, but the rolling call diagonal makes money if the market goes down or it's unchanged, or it goes up less than the credit collected from the short. I know that's like a lot of words. So hopefully in my explanation, as I show you some of these, it'll kind of help to bring it to life. So here's an example of a rolling put diagonal. And for those newbies that haven't seen this before, a +1 when you're trading usually means that you're long. A -1 means that you're short. A +1 when you're long means I bought that option. A -1 means when you're short that you sold that option. So here would be an example of a rolling put diagonal if I was putting it on today. I would buy the 38.65 put expiring April 9th, and I would sell the one expiring tomorrow at 39.10. Now, that's what SPX was. It closed at 39.09, so I'm just rounding to the nearest number. That is an example of a rolling put diagonal. Here is the risk graph for a rolling put diagonal. It makes money as long as SPX trades between 38.98 and 39.34. Currently, when I created this, it was trading at 39.06. I believe that it closed at 39.09. And it takes about $5,000 in buying power to do one contract.
Can I ask a question?
Sure, please do.
Okay, so when would you do the put or the call? Like when would you decide to do either one?
Well, here's the dilemma is I tend to adhere to what Dr. Jim always says on Tastyworks, and which is nobody knows anything. On the other hand, if you have a premise that you think the market is going to go up and you're right, a rolling put diagonal would be more effective. If you think the market is going to go down and you're right, the rolling call diagonal will make more money. If you believe the market is going to trade sideways, or you don't have a clue on whether or not it's going to go up or down, put on one of each. So having said that, 53% of the time, the market goes up. 47% of the time, the market goes down. If you had to force me to pick a strategy to do for the next year, I think I would do 2 rolling put diagonals and 1 rolling call diagonals if I could afford it. If I couldn't afford it, I would do 1 of each. All right, there was a question. Whose was it?
Does the rolling put and the rolling call diagonal have a limit to how much you can lose?
They are both a undefined risk strategy, but every 2 days you're adjusting it. So it is not a defined risk. Actually, it is. I'm sorry. It is a defined risk strategy, and your risk is defined by that 35 delta wing that you purchased. So a 35 delta wing, if I was to actually compare, let me go back and look at this. And it looks like, what's the width of this? 39.10 minus 38.65. 39.10 minus 38.65 is 45. So if I multiply that by 100, your maximum loss here is 4,500. So yeah, your maximum loss here is $4,500, but you're collecting some credit every week as you make adjustments. So that is your max
Dale.
risk.
Dale, I had a question. Could you briefly repeat if you're expecting the market to go up? Was that a?
If you expect the market to go up, put on a rolling put diagonal. It'll do better in a bullish market because it does well if the market goes up or it's neutral, or if it goes down less than the credit you've received from your short strike.
Okay.
A rolling call diagonal will do better in a down moving market because it wins if the market goes down, or if it's unchanged, or if it goes up less than the credit you've received for your short strike. So here's an example of a rolling call diagonal where I buy the 39.55 and I sell the 39.10 call. Your maximum loss here is $4,500 in any, but you're always rolling that short strike. So it changes periodically. So your maximum loss can change as the width of your strike widens. Here's an example of a rolling call diagonal as I put it onto the Analyze tab. It makes money, as I've said before, if SPX goes down, stays unchanged. The break even here is 38.50 and 39.32. The maximum win for me here between today and tomorrow is 13.11. And SPX currently was trading at 39.09. So my break even is at 39.09. What's that? 24 points up and 59 points down before I start to lose money tomorrow. Now, if you put on both a put and a call diagonal, essentially that's an iron fly. And this is what it looks like if I put on one of each. The break even at this is 38.87 and 39.31 by tomorrow. SPX is 39.09 today. So let me demonstrate a rolling put diagonal and a rolling call diagonal, and I'll do it on Thinkorswim as well as on Trade Diff. So let me stop the share, and then I'll go into Trade Diff. I'll move into my $1 million challenge, and I'll put on one in SPY. So I'm going to go in here. I'm going to click on my $1 million portfolio. This is paper trading, by the way. And I'm going to click on trade. I'm going to
switch over there. Yeah.
Okay. Let me share my, have I shared, are you seeing the screen or not?
Not yet.
Not yet. Okay.
Nor have we seen that little dog either.
Oh man.
Where is he?
He will be wreaking havoc if I bring him up here. We had a major accomplishment this week because he pooed in the yard for the first time. So he had his inaugural poo in our backyard. So I'm excited about that.
Do you go to the dog park scale?
Not yet, because he hadn't had all of his shots. I think in about a week, he'll have the rest of his shots, and I'll feel more comfortable bringing him around other dogs.
Is it for the safety of other dogs or him?
Both. You know, there's like a cough that they can get, you know, it's pretty infectious from each other. And then he's got to have his rabies shot. For those of you who know my wife, who's Turkish, sometimes her pronunciation, and she's been calling it his rabbi shot, Bob. So I said, oh, now our dog is Jewish. All right, I'm glad I got a laugh out of that. All right, so here is, let me show you on SPY, and I do it 15 days out. And I'll put on a put diagonal. So I'm gonna look for the 35 delta put. Here's a 36 delta. So I would be buying this one, buying this guy.
So do you not have SPX capabilities on TradeDiff?
I do not. I'll show it to you on Thinkorswim, but all we have that you can practice it on in TradeDiff is SPY. At some point in the future, we'll get SPX, but we currently don't have it right now. And part of it is driven by the API that we're using with Thinkorswim and TOS. So let me look now down here, and the price, last price was 389.80. So I'll look at a 390 put and I'll sell this guy. Okay, so I could up the number of contracts that I want here. Let's see, if I traded, 5 of them, essentially 10 of them is equivalent to 1 SPX. So this would be a rolling put diagonal. So if I could click on that. Then, as you guys know, it falls into ungrouped, and I could click on 3 dots and I could put this into rolling put diagonals. Then it would go into rolling put diagonals. So let me put on a rolling call diagonal, and I'll put that in the SPY. For some reason, sometimes it's a little slow. I think it's all of these people who are, this TradeDiff is just so popular. These millions of people are trying to get on and do their homework assignments because they're waiting till the last day because they want to be put up on the PowerPoint slide that says they're the 5-star student. Am I right? So we click on here, 15 days, and you go down and you find the 35 delta. And here's a 36 delta. And I will buy this guy. And then I'll go in 1 day from now, and I'm going to sell the 390 puts. Now, this is not for a person that wants to leave it alone. Right, Nancy? Because it's a significant amount of work because you're rolling these every 2 days.
Yes.
So I'm going to click on sell. Nancy's texts me regularly and says, have you rolled yet? And so we collaborate on our rolls. So here's an example, but you can see $156 in theta decay that's coming daily. That's why, theta covers up a lot of sins in terms of picking a wrong direction. And once that guy goes through, it falls into your ungrouped. You could click here and you could put into rolling call diagonals.
And how much did that last one cost you, Dale?
Essentially, to do 10 contracts, I would expect in SPY to take you around $5 to $6 grand in buying power. But it will vary depending upon how many of these that you put on. Let me go ahead and I want to bring over TOS here. Let me go ahead and put a privacy thing on, and then I'll bring over TOS. Essentially, it's the same principle. Greg, have you ever traded this in SPX?
Not yet, no.
It's a very large, as you can see, trades for $3,909 per. It cash settles. So if I went here and I bought the...
Get your heart rate up, I tell you that.
Get your heart rate up, doesn't it?
This
so
thing, yeah.
I'll click on this in terms of buy. Let me start over. 35 delta, buy. You You can hold on, for those of you who are TOS users, you can hold down the control button and select everything that you want in terms of legs. Then I'm going to pick the 39.10 and I'll click on sell. And then I'll change this to one contract because this is like a thermonuclear weapon. It's huge. So confirm and send. So as you can see, one contract in the beginning doesn't take a lot of buying power. Here it starts off only at $2,000 in terms of buying power, but it can quickly balloon. So I think you guys have got the gist of it there. I'm going to click on the Analyze tab again, analyze this trade. I'll go down and I'll click it. You can then see that risk graph that I showed you kind of in that video. This is between today and tomorrow. So you always want to make this to be today's date, March 25th. This is the date of expiration of your short leg. So that's that. And so let me go ahead now.
So what's your probability of success?
You know, it's only about 36%, but the thing is, I'm flipping that but my amount of win is greater kind of than a loss. And then every 2 days, I'm resetting it. So I get that chance to do it. And I'm even unsure about how accurate that is on short-term things like tomorrow's.
So I guess I do a different variation. I guess my variation I thought was the same, or what I've been calling a rolling put diagonal or call diagonal is totally different. But so with your philosophy, you're doing an SPX trade in a 15-day span. You've got 6 0 DTE days to trade, maybe 7. Give or take. Let's say 7. And if you win 2 days, you've broken even on
the amount that it costs me to set it up.
Yes.
Yeah,
because
so you got
because your long leg is, you're assuming if you're assuming that SPX is, everyone tells you to put money in the index fund because it's going to go up 10% every year, so it's on an upward trajectory. That means your long leg is going to expire worthless. And so what you're really making your money from is the short sells or the short legs every 0 DT or every day that it expires.
Right, that's correct. And
that massive theta decay.
A massive amounts of theta decay. And there's been times where when I set these up, it's over $1,000 a day in theta decay. It just depends on what VIX is. And I don't know what it's looked like for you, Nancy, as you've monitored it. But it's regularly in the hundreds of dollars per day in theta decay. So it gives you a ton of theta. So essentially I would put it this way, is this what Tasty Trade always tells us too, is that fear is overstated, and normally the perception of how bad things could get is worse than what's realized. That's normally the case. Now there's obviously exceptions, outlier events, but you're basically playing that big picture. Normal times, fear tends to be overstated. So those few times when the market moves less than what it thinks it's going to move, that's when you really make money off of this. And by the way, on Thinkorswim, you can always see what the market is expecting in terms of expected move. Have you seen that, OJ?
Yeah, absolutely.
Yeah. So if you click on SPX, for example, the market is expecting a plus or minus tomorrow of 27 points. So basically means if it moves less than that, this kind of trade is going to win. If it moves more than that, this kind of trade is going to lose. And that number is really driven by VIX, the perception of risk that's out there in the market. Now, I want to share with you, this is what I was most excited about, is sharing some of the performance as I've done a back testing here. And here's the double diagonals performance in 2019. And I want to show you here, terms of, I love the use of the laser pointer, is these are dates and it's every 2 weeks. And occasionally I ran into some bad data on toss, usually think back. And if that's the case, I just skipped that 2-week period. So you can see there's 4 kind of bad data glitches for you geeks out there. If you're interested in how do I know it was bad data, I'll talk to you offline about this. But if I did this trade a double diagonal, what that means is that I'm putting on 1 contract of a put and 1 contract of a call diagonal, and I'm buying the 35 delta wing, that it made $17,129 if I did this every 2 weeks for a year in 2019. The buying power it uses is on the low end, $6,000 to on the high end, $15,000. Now you may say, why did it take more buying power at the $15,000? It's when your wings get further apart, it takes more buying power. When your wings get closer together, and because SPX is continuing to move, one side is staying consistent, your long end, and your short end is kind of moving back and forth. So at any time, if it's too much buying power and you can't afford it, you can always roll your call in closer to take less buying power. But that kind of gives you an idea of how much buying power. Now, SPY's performance in 2020, and I did this on 10 contracts, and I just did the rolling put diagonal, and I bought the 30 delta for 1 month out. Essentially, it earned $17.79 per contract, or $17,790 per year if you traded 10 contracts. Maximum buying power used at any one time was $50,000. So obviously, if you just traded 1 contract, the maximum buying power it ever took was 5,000. Now here's a real example. In my brother's account, it's a smaller account. By smaller, I mean was less than 25,000. The max win tomorrow is $490. There's a break even of SPY at 388 on the downside and 395 on the upside. Now, it wasn't that when I set it up, but this is what it is today as it's moved around, because this is like the 2nd day out of 2 days that it's got to go before I adjust it. So I wouldn't have set it up this way, but this is the way it's ended up. SPY is trading at 389.70. You know, it's up 2 points after hours. So if that closes tomorrow up 2 points, you know, that'll help me to kind of try to hit this apex. And I believe the apex is somewhere around 391 for me. So your assignment, should you choose to accept it, is to put on 1 rolling put diagonal in SPY and 1 rolling call diagonal in SPY. And I'm going to stop the share. It's 5:48. And what questions do you have, either about other things that we've covered, or, and by the way, just to let you know, we will continue the contest. I believe the contest has a date. I think it continues for another 30 days. So feel free to put on any trade we've learned so far, or you can color outside the lines if you want and put any trade on if you'd like, as long as it conforms to not taking up over 5% in any one underlying. What questions do you have? Well, then I'm going to go ahead and stop the recording.